presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate you growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Get that channel, folks, TFNN in your pocket. I love that little promo there. Replace fear with love. Be impeccable with your word. The human mind is like a fertile ground where seeds are continually being planted. When you are impeccable with your word, your mind is no longer fertile ground for the words that come from fear. Your mind is only fertile for the words that come from love. You either live in love or live in fear, folks. Get rid of the fear. Guess what? You open the door, you look at the fear, say, bye-bye, see you later, alligator. Market-wise, let's take a look at it out here. We have the Dow Industrials off 194, NASDAQ down 236, S&P's off 40. Gold contract down $30.60, trading at $2,516 an ounce. We have silver down 60 cents, $29.36 an ounce. Light sweet crude up 93 cents, $72.86 a barrel. Notes and bonds, a 10-year note down 18.6, trading 113.10. The 30-year off a full point, plus 10 ticks at 124.02. And King Dollar right now is trading up 474 ticks at 101.512. Euros 111. Yen is 145.46. And the British pound is 130 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the NDX. Let's go take a look at it. Here we go. NQ. Okay, so you went from positive to negative today. My takes, the market's turning, and this is the beginning of the turn. So what we have here is this. You got the NQs. Make sure I got the NQs. Yeah, we're good. You're down 259. Now, the last bar that we just, not the bar that we're on, you know, bottom line, try to pop again, but the bar prior to this, 10 minutes prior to this, we still have a high volume low that's laying out here at 604, 19,604, and we're at 19,647. So it's going to get a little dicey in here because the biggest volume down actually was down at 672, and we're at 645. We go to the Qs now. Well, actually, so let's look at the NDX 100 here. So when you look at the NDX, the Qs, what you have is that you went to a higher high, you gave it up in spades, you were coming into 56 million shares. We only done 27. Now, what's also happening is that we do have an expansion because the market has given it up. So the real question is going to be, you know, do we get follow through here? My take is that we are going to get follow through. And this is wild how it's setting up with Jerome Powell, tomorrow at 10 a.m. Now, what does happen, folks, is that, as Tommy was saying prior to this, when he was just on, prior to me coming on, is that approximately at 9:30, they will release what he's saying. So you're going to have that, number one, and we'll see what the market does with it. You know, don't forget about our man, Mr. Larry Pesavento. It's going to be a great time to get in with live trading. He's going to be trading 9 to 12, and there's going to be volatility. That's for sure. So if we take a look at the SPY, we can see the SPY set up differently, man. You know, the SPY probably still wants the high. The high in the SPY is well, I don't know. We hit 563. 565 is the high. That could be it. And now you talk about a straight line move, right? I mean, we went straight up from the 5th of August. Straight up, no doubt. We go look at the gold contract, GCA. So we have with gold contract, you're pulling back with light volume. That's what you want if you're a bull in the gold market. You got 162,000 contracts, 165 right now. You're coming into 200 and something. Oh, let's see what we're coming into. Yeah, we're coming into 224. So that's what you do like to do. Now, the scary part about the gold contract right now is that we have had 5 failures. 1, 2, 3, 4. 4 failures up at these highs. So you got to keep your eye on this beyond belief, because if you do fail, you'll go right back down to the other side of this consolidation. And, you know, the last time we didn't make it all the way down, which is saying it's strong, okay? That's how that says. The bottom of the consolidation is 2350, where when we came down, we only came down to 2398. So it was better, that's for sure. We go to the dollar index. We take a look at the dollar index. That's getting a pop today by 458 ticks, you know. But this has been one straight line move down, no doubt, for the dollar. What is intriguing, let's go to the note and bond market. So we know we got Powell tomorrow talking. The note and bond market is like out here today, you get 3.1 million contracts. Now, that's a lot of contract volume, right? Yeah, that's right. 1 second, let's look. Oh, this is going to be close, man. This is wild. Yeah, we're going down with volume, man. So that means that the 10 might test this 112.16. That'd be wild, man. Now, what would Powell say that would make it do that? But we're going down with, well, what you have is this. We definitely got an expansion of volume on the way down. They're not killing the price, but 17 ticks is still, you know, for the environment that we've been in right now, that's a lot of ticks inside of the 10-year. Now, granted, when we went topside with 4.2 million. So we definitely went up, and we went up with some major volume. There's no two ways about that. We go look inside the NDX, the strength versus the weakness out here. Moderna is down 5.5%. You have Intel down 5%. Tesla's down 4.5%. Booking.com's up 0.9%. Gilead's up 0.8%. Okay, so you can see inside of the NDX 100, the stocks that are up fractionally. The stocks that are down 4.5%. We take a look at the Dow Industrials. The way the Dow Industrials are set up right now, putting juice into the Dow. American Express is the strongest. That's 13 positive points. JP Morgan 11 taken away from it. Microsoft minus 55. Amgen minus 34. United Health minus 26. Stay right there, folks. Come right back. We have the Dow. The Dow Industrials right now is trading down 180. Nasdaq's off 244. S&P's off 41. We're coming right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Sit down. Dow's off 180, Nasdaq's off 249, S&P's are down 41. Now, this is going to get really wild, folks, coming into the close because, you know, what you have here is that the market's stalling right here. You know, and because we've been up so substantially, it's like, okay, man, can you get a bounce going? And we're down at the bottom of this range. There's no doubt about that. And my take right now is that we're going to close at the lows. That's how this is set up. If you're watching Tiger TV, you can see this bar that I'm looking at, the bar that was taking place at 10 minutes to 2. I suspect we're going to go after that because of the fact of 20 minutes ago. Because we had come down fast and furious. You come down, we got 13,000 contracts. It tried to pop with 9. It couldn't do it. So when you basically try to go both ways, meaning you've come down, we had volume on the way down, you try to pop, you get light volume on the way up. What does it do? It makes a difference. It's saying that, okay, the lows, they're coming after us. No, well, we're coming after the lows. Let's put it that way. That's how this thing is set up right now. So let's get over to our man, Mr. Tim Moore, as we do every Tuesday and Thursday. And don't forget, folks, you can reach Tim every trading day at ord-oracle.com. That's ord-oracle.com. Tim Ord, what's going on, brother?
Well, you got a lot of cross currents kind of going on here. Chart one's kind of messy, but let's try to get through it.
Okay, cool.
We'll take a quick look at it.
Okay, we got it. I have it.
All right.
I like your messy charts, by the way, Tim. There's a lot of good information in them.
Yeah. Sometimes I try to cover too much, and you can't see the forest through the trees, you know. But anyhow, get it in a nutshell. You know, we had a decline into early August, and the reason why that area we kind of blew through that area a little bit. But that light blue area I shaded in light blue,
yes,
was the times when the trend was around 1.2 or higher, and 1.2 or higher on the trend is panic, and panic only forms at lows. So anyhow, that area was basically between 520 to 540 general. We went a little bit below it. It was supposed to be a support area. And in a nutshell, it kind of worked. It blew through it. Actually, 2 days is all. But anyhow, it did find support in that region, I'll put it that way.
Yes.
And the market rallied up, and it was up like 8 days in a row. That predicts the market will be higher within 5 days. I don't know, big percentage of the time, like 90% of the time. Well, yesterday we did close at a new high, barely. But if you notice, the SPs made higher, not counting today, but the SPs made higher, or went higher from Monday.
Yes.
Monday, Tuesday, Wednesday. And if you notice, you go down to the bottom window, which is the SPX ratio.
Okay.
It actually, it went down.
Look at that thing, huh? Wow. I love this ratio, Tim. This ratio is something else, man. It really picks things up. Holy cow.
Yeah. And actually, I wanted to tell you, too, we got a buy signal on August 5th, which is basically a day of the low. The reason why I kept that position, because the VIX every day made a lower low. And the VIX kind of leads which is second window up from the bottom.
I see.
And,
okay, I see that. Yeah. Okay.
If you kind of blow, it's kind of hard to see there because the VIX just totally blew out at August 5th. It went up so high, it kind of made everything kind of unreadable. But I watched the VIX every day. As long as the VIX closed at a new short-term low and the SP closed at a short-term high, I kept that position.
Nice.
And so the reason why there was a gap, around 540, went into that gap on lighter volume. And so, okay, that's a bearish sign, but the VIX made a lower low that day, so I kept, even though we went through that gap on lighter volume, I kept that because the VIX made a lower low. So anyhow, the VIX has a lot of information, but if you notice, you can't quite see it, but the next window up, the second window up from the bottom is the VIX, and the VIX has started to go up as the SPs were going up, and that's a bearish sign. And one of the reasons kind of kept out of that position. So right now you got the market kind of turning around here. We did test the gap off the July high. And if you compare the volume, you can, which is I tried to do here, that purple area.
Okay, I see it. Yeah.
Yeah. If you go down to the volume and compare the volume where it happened, where that gap formed off the July high, which is that purple area.
Okay. Yes.
Shaded area. And you compare that volume to when we got into the gap, you can see it's a little bit lighter. And that's the reason why that gap had resistance.
Yes.
And the VIX started to go up, too. So that was quite a bit of reason.
Well, you know what's amazing, Tim? That one trade, and folks, okay, if you're watching Tiger TV, I got to put this over here, man, because I'm telling you, man, I said this Tuesday, but I got to reiterate this because check this out, folks, okay? What Tim's talking about. Okay, so here's the fear. Okay, the fear was generated on the 5th. That's when Tim got his buy signal. Okay, and I'll just use a closing price. Closing price is 517. Okay, well the bottom line is that he got out 2 days ago, which is 557. I mean, you talk about that could be one trade for the whole year, Tim. I mean, congratulations.
Yeah,
I mean, it's amazing.
Yeah, that's pretty good. Yeah, actually, what really increased my, I don't know, what gave me more confidence
to stay
in the trades I do is because of the VIX.
Right.
The VIX on a daily basis really puts a lot of information on the trades. You go in, like I said, I got long on the 5th.
Yeah.
The only reason why I kept that position because the VIX kept going down.
Right.
And finally it started to go up, and I'm thinking, okay, we're getting close to a high here. So, that was a really it takes a little bit of, I don't know, I guess you have to play with it for a while to figure out what the key is, but it does give a lot of information. So
I can see that. You know what happens too visually, Tim? It's amazing. I mean, if you saw this, when you're taking a look at this, folks, if you see what visually that the SPY/VIX ratio, man, I mean that's pretty intense in itself. Do you know what I'm saying? Because visually, when that turns, you can really see it. It's like, whoa, man.
Yeah.
Okay. Yeah.
Yeah, I'm visual.
Yes.
I can't comprehend anything in writing, but put it on a picture. I can make sense out of it.
And you're cooking.
So,
I like it. That's right.
So technical analysis, as long as I can see what's going on, I can make my conclusions a lot better than actually reading it out of a book. But anyhow, we don't have a lot of time here, but flip to chart 2.
Okay, we're here.
In a nutshell, I think if you look back in August 2020, which is that possible scenario I got there on the bottom window.
Yes, I see that.
I got it squared out.
Got it squared, yep.
I bet before this thing's all over, that's what it's going to look like.
Right.
Just because we got a lot of similarities. I forgot what they all were, but there's several different similarities between August of 2020 and August of 2024. We pretty much had to hear the music.
That's all right.
So.
Just stay right there. Folks, we'll be coming right back. Tim Ord, Tom O'Brien. Don't forget, you can hold the Tim every trading day at Ord, ord-oracle.com. We have the Dow trading down 236, Nasdaq's off 285, S&Ps are down 51. Tim and I are coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Price for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. Tim Ord, Tom O'Brien. We do appreciate you growling and prowling with us out here. We have the Dow off 206, Nasdaq down 288, S&P's off 49. And if you are trading those NQs, the NQs just broke that low and broke them with volume, whereas the E-minis didn't, folks, okay? So this is going to get interesting watching this close out here because we blew through that low, and now we get another high-volume low. We're talking with our man, Mr. Tim Ord, we are talking markets. I have the second chart up, Tim.
Yeah, so anyhow, I'm thinking what's going to happen is, we had the zig down to the August 5th low, then we had a rally up that retraced almost 100% of the previous decline.
Yes.
Which is similar to what happened back there. Then now I think, in general, we're going to go back down again. So if we flip to chart 1,
okay,
here's probably gaps are like tops.
Right.
If you hit a gap on lighter volume, it's going to be resistance, and if you go down into a gap, you do so on actually has to be 10% or lighter volume. It's going to be support. So I'm thinking there's a gap down around 540. Which I got, scenario down to there. But I think we're actually going to go all the way back down to 520, hit that gap down there. And, time will tell. Do I got a real clear signal here? Not really. But, market, a lot of times markets, tops are, put it this way, a little bit harder than bottoms. Bottoms, they blow out.
All right.
Everybody's scared and how bad it is. And you just try to pick the worst scenario you can find in the market
and buy it.
Buy.
I'm with you.
That's right. Yeah. And you close your eyes and go have a beer somewhere.
Yeah,
but
exactly.
On tops, they go down. Sometimes they come back at you, try to knock you out, whatever. And so I don't know.
Well, this will be quite a consolidation. I mean, I'm with you 8,000%, man. This high volume low wants to get tested. What a consolidation this would be, though, man. Folks, this would be like a trader's paradise if the consolidation in the SPY is like from 565 to 520. I mean, seriously, right? That'd be so sweet.
Yeah, we'll have to wait and see, but we'll be talking in maybe a month from now. Basically 520, so we'll have to see.
All right.
But anyhow, usually a lot of times gaps get filled, and so if they form, you kind of watch them, mark them, and a lot of times they come back to them. So we'll see. But we got a lot of panic in that region.
Yes.
So because that's that blue area. And another thing, on your previous show on Tuesday, we talked about the Zwag breast thrust indicator.
That's right.
Which did get triggered on went from August 5th to August 19th.
Right.
That was 10 trading days, and that was triggered, went from 0.4 to 0.62, I think it was.
Yes, it was.
So sometimes you get the market stalls, sometimes it kind of keeps chugging higher, but that Zwag breast thrust indicator only comes in bull markets. So this is not a start of a big decline. And also, when you got the RSI hitting 80 on a daily, it's never the final high either. So, but they can, come up like consolidations like it did back in 2020 in the August period. So,
and what's so cool here, folks, is that because we get that, well, as Tim's teaching us, you get the fear that's taking place. The fear is down basically at the 420 area. Now it's going to be so cool this time, Tim.
520.
I'm sorry, what? 520. Yeah, 520.
Yeah, 520. You're right.
What's so cool is that we already know what the volume is down there, folks, okay? So it'd be so cool if you get the panic again, but then we get lighter volume. When you put that together, that would be the buy again. And then you don't know where the sell would come because of the Zwag indicator, which would be so cool, Tim. Do you know what I'm saying? Because it's like, okay, it comes down to test it. Just that in itself would be like, okay, this is pretty cool. But you very well could really catch a low. You know what I'm saying? We don't know that yet, folks, okay? But I'm just trying to set that up so that different things that Tim uses, which is so cool, is that you could use what has happened in the past to check your work as it's coming into those areas again, which is huge. Yeah.
So I'm thinking, that if we go back to chart 2 again, that possible scenario. See, all that did was the market didn't retrace, Fibonacci-wise, 0. If you look at that trading range where I got it boxed in red.
Yes.
Red square. Fibonacci, it didn't retrace anything. And if you look at our current chart, I guess you can't quite see, but this sideways move that's been going on since June, we rallied up, came back down, rallied back up. We're building a sideways trading range here.
Right.
And it's probably going to be the halfway point of the next move up when it, finishes.
Yes.
So actually, let's go to chart, because I got a monthly chart. You can see a little bit better.
Okay.
Yeah, flip to chart 3.
I have it.
So what I'm saying is that this trading, if you look at where we currently are, this is a monthly chart. And, I got a line that's support around, looks like about 520. I don't know. It's hard to see. Maybe 530. And I drew a trend line off the previous highs back in April, May,
I see it.
June
Yes, I see it.
Thing there,
Yep.
those tops. So we went down and hit it. Maybe we come back down again. But Fibonacci-wise, that's just a shallow retracement.
Right.
Compared to you take off, you start Fibonacci, what do you call it? The October low of last year, you pretty much had an impulse wave straight up. So you start with a Fibonacci level at that level to the high we had here, currently, and you do a Fibonacci retracement. You're looking, I don't know, 25% retracement maybe.
Yep.
Eyeballing it. And so that's a shallow retracement. And if the market can't go, even pull back a decent amount, this area we're screwing around with right now, in my opinion, could be the halfway point of the next move up.
Right.
So if that proves to be true, we'll have to wait and see. But
pretty cool
on a bigger time frame. It looks really good. We're getting into a seasonality period. It's not real favorable for the market. A lot of times you get chopped back and forth, September, October. That's the reason why I think there's a good chance we pull back over the next, 30, 50 days, whatever, or, next month or so, just because this is ideal time. If you're going to consolidate seasonality-wise, this is a perfect time to do it.
Yes.
Then we build strength because we're going to build probably more trend readings above 1.2 if we do get the pullback, building strength for the next rally up. So we'll have to see if that.
And more than likely come in right into that same range again where the trend went up the last time and the time before that. Right.
Yep, right, yeah. So once you start seeing a panic area on the trend, once you go back into it, you should see it again. If you don't, that's not a good sign, but most times you do, or I don't know, 80, 90% of the time you do.
Sure,
So
and if you don't, folks, that means we're going lower, which is worse. Stay right there. Tim and I come right back, folks. We have the Dow down 197, Nasdaq's off 292, S&Ps are off 48. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
There's no better time than now to sign up for Live Trading Fridays. Why is that? That's because the next trading session, this Friday, August 23rd, coincides with Jerome Powell's Jackson Hole speech. Chairman Powell's comments have the power to greatly move the market, and Larry is ready to capture those gains on the moves. Use code LARRYAUG24 at checkout to save $50 off your first month. See you there, Tigers. This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Tim Moore, Tom O'Brien. We do appreciate your growling and prowling with us out here. We have the Dow off 200, Nasdaq down 296, S&Ps are off 50, and we are on chart number 3, Tim.
The thing I just want to point out is the bottom window is that SPX VIX ratio.
Yes.
If you notice, last month we made a higher high.
Yep.
And the compared to the previous month, so that would be June to July. If you notice, that ratio went down.
Yes.
So that it just kind of reinforces the indicator. That was on the monthly time frame. So anyhow, let's move on.
Okay.
Chart 4.
Yes, I have it.
Yeah, actually, I didn't know we had this on here, but anyhow, chart 4 is that Zwag breast thrust indicator. It's kind of a repeat. The Zwag breast thrust indicator only shows up in bull markets. You won't find them in bear markets. So if the market's going down and you don't see a Zwag breast thrust indicator, triggering, it's going to go down more. But I've labeled over the last couple of years where they were, and again, we had one off the August 5th up to the August 19th. We had a Zwag breast indicator got triggered. So we're in a bull market. What's going to happen in a bad seasonality period? We'll have to wait and see. But I'm betting on a pullback here. But I haven't bet real money on it yet, so I'm kind of waiting. So, but my analysis, I think it's going to look like August of 2020.
No, and I can see that. And what happens on a longer-term basis, folks, that doesn't even look like a pullback, which is amazing. But I remember that, I can see that happening, right? It's because it makes sense. Consolidate a bit, market gets stronger, right? Bottom line, and then, flips everyone out and decides to take another leg up. I love it.
Right. Yeah, so anyhow, if it does pull back, which I think it will, that trend, the 10-day trend, right now I think we're right around 0.9 or 0.89
yes.
10-day trend, which is not ideal. It can still go up, but, you like to see that up around 1 point higher, actually, if you can get it up, a 10-day trend up around 2. That's a lot of fear in the market, and that would imply to get that fear off, it would have to rally for a longer period of time.
Right.
So the higher that number is, the more fear is in the market. That would imply the rally could go higher. So if we do pull back here, which I think we will, and that 10-day trend gets up to 1.5, 1.7 or something, that's a lot of fuel to drive the market higher into year end. So
yes.
we'll see how that happens or not.
No doubt.
So
okay.
Let's take a look at gold market.
Okay, I have it.
Chart 5?
Yes, I do. I have it. Yep. Chart 5. Yep.
All right. Kind of just to repeat, the short-term trend is up. This is kind of an intermediate-term trend. The bottom window is the 50-day average of the up-down volume for GDX with the 50-day average. So that's like 2.5 months of data. And as long as that data stays above 0, the uptrend's intact. There's another indicator right above it, which is the advanced decline, 50-day average advanced decline, but doesn't work as well as the up-down volume. And I don't know why, don't really care, but the up-down volume is the one to pay attention to. And right now, the market's GDX is setting at a short-term high, and this indicator today was plus 14 and change. 1475 maybe. I can't quite read it, but it's way above zero. As long as that indicator holds above zero, the uptrend's intact, and all that light green area across the charts are times when that indicator was above zero. So we still may push higher. Kind of choppy up so far, but not seeing any real danger signs. I marked on the top window there. I think there's the Head and Shoulders bottom that formed.
Yes, I can see that. I can see the Head and Shoulders. If you has them marked. You know, it's pretty cool too, Tim. Like today, folks. Okay, I mean the gold market itself. It's getting whacked. It's down $29. Now it has lighter volume that's going into, but it did fail to hold those last four tops that we saw. So it's pretty cool that the GDX is holding up, because the GDX actually is going to have light volume today, much lighter than it had basically, on the way up. And it rejected lower price. It rejected 38.54. We're only 30 cents higher than that, but that's pretty impressive with the gold contract not holding those highs. You know what I'm saying, Tim? So pretty cool.
Yeah. I know. Actually, let's look at the short term. Exactly what you're talking about. Okay. So you're talking about volume, which is really good. This is the top window's GDX, which is basically matching this high of mid-July there.
Yes.
And if you notice that next window down is a cumulative up-down volume. So
right.
It's not a 50-day average; it's a cumulative daily volume.
Yes.
And it blew through that previous high of mid-July.
Right.
So now you got volume showing bullish signs, doing an analysis of up-down volume or volume compared to up days, down days. Now you got up-down volume compared to what's happening. So there's really no divergences going on.
Right.
If you look back in December of 2023, that's that pink area I got shown there.
Yes, I see that. Yep.
Top window's GDX. GDX was making higher highs. Next window down was that up-down volume made lower highs. And my point is, we got the opposite of that. We're matching the previous highs of mid-July, and that up-down volume is making way higher highs, showing there's volumes way outpacing down volume. So to me, that's a bullish divergence, I guess. And ultimately, I think we're going to keep going higher.
Yes.
So not really showing any short-term signs of kind of exhaustion even on the short term. So it looks good.
And then I have the last shot up.
Yeah, last chart. This is always you got to watch the bigger view.
Right.
The bigger view rolls a intermediate view, and the intermediate view rolls a short term view.
Yes.
But you got to have the big view on your sights. And back in January 2021, the top window, which is a monthly cumulative up down volume. And that's all it is. It's cumulative, and I put a Bollinger Band with it. Gave a sell signal back in January of 2021. Stayed on a sell signal until May of this year. Gave a buy signal, and it's a clear buy signal. We're up. The monthly charts are definitely in an uptrend. You can have some consolidations, but it shouldn't be anything significant. Other than
choppiness, whatever. Yeah, right.
Yeah, well, it shouldn't be any tops. I guess. If you just took this chart and traded the monthly chart, you'd do very well over the long term. But we're still gaining ground. This monthly chart, from month to month, since basically May 31st, has basically stayed up, and we keep making monthly higher highs. And the bottom window is the cumulative advanced decline of the advanced decline, not the up-down volume, but it also is matching higher highs as the up-down volume is matching higher highs. So
because this thing's been going, it's been going for 6 months now. I mean, I just went back 6 months in the GDX. It was $25.67. Yeah, pretty cool, man. 25 to 38, man. Yeah.
I wonder how high we're going to go, but I'm thinking this is going to be like 2000. So we'll have to wait and see. We'll talk a year from now. So
yeah, I hope we're talking in the Four Seasons, Tim.
Yeah. So.
Tim, you have a great weekend, a safe weekend. Of course, we look forward to speaking to you next Tuesday.
All right. Love you guys.
Love you. Thanks, man. Have a great one. Have a safe one. Stay right there, folks. Come right back.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow's off at 242, Nasdaq's down 323, S&Ps are off 57. And let's go into the Qs again. Looks like NQ. Yeah, she's trying to bounce. She can't bounce, man. You got a little pop here, but that's about it. What do we got? You got nothing left. This is kind of where it's at right here. So it's going to get intriguing now. So now let's get the Qs up because we got to get ready for tomorrow morning. And don't forget, tomorrow morning, man, Larry is going to be trading live. So if you'd like to come to that, just go to TFNN. It's right on the front page under featured content. Because what we're going to have here is that you get a market that failed to hold price. The Qs went from 485 to 474. Big number. Expansion of volume simultaneously. So we've got a turn that's happening. Now, here is divergence. Let's see if we still have it in the SPY. Yeah, you really do. You know, the SPY, bottom line, not telling us much. You didn't have an expansion of volume. We hit a higher high. We just missed the high itself, meaning the 565.56 high. 565.16, rather. We hit 563. No, we hit 555.08. Oh, I see. No, one second. Yeah, 565.18. That could be it. That could be it. I mean, you talk about a straight line move, man. So this will get interesting. Because it's a straight line move too, folks, okay? What you will have here is that I'll just put a line on this so you can kind of see how this shakes out. What happens is that it's not going to be hard to break this uptrend because the uptrend wasn't parabolic, okay? Because it's basically almost, it's almost a 45-degree angle. If I do it like that, it's a beautiful angle. But that being said, it's going to be really easy to break the channel line. The channel line is at 554.12. And we're at 555.18. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night. Have a safe night. Come back and visit Tommy tomorrow morning. Kicks us off at 9 a.m. Great show, folks.
Building wealth